Hi everybody, and welcome back to the channel. And as we make our way through southern Illinois, the suburbs of southern Illinois, on this beautiful Tuesday evening, I wanted to talk about something that I've talked about on the channel before, but I think would be a good topic to go over, especially as the price of gold has been hitting pretty much all-time highs. We've seen basically it hit 3,400 to 3,500 an ounce, I believe. I haven't checked the price today, but the last I heard, it was trending upwards in that direction. And as we see the price of gold go up over the long term, I think it's way overdue, first of all. And I also think that this could be just the beginning in terms of where gold is going to be headed, which I think, with the way the dollar has been devalued over the last 5 years in particular, could be a lot higher, past $5,000 or even $10,000 an ounce. And I also believe that there's the potential for gold to be revalued to the dollar. And I think that would actually be a very good decision. Now, will it actually happen? We'll see. I think there's a possibility under this administration that we see something like that, where perhaps gold is revalued to the dollar, and perhaps that does result in a significant boost to the dollar. Now, that's just my theory, but we'll see what happens ultimately. Now, what I do want to talk about, though, is, we talk about gold, we talk about silver, but what about in particular, we not only have gold and silver, the metals, but we also have the mining stocks. And specifically, we have the silver and gold mining stocks. And when we're looking at silver and gold in particular, and these mining stocks, you can go basically one of two routes. And actually, you could probably kind of do a mix if you want. But you can go by the, junior miners, or you can go by the senior miners. Now, the junior miners are going to be your more risky type of assets. And in particular, these junior miners are going to have the potential for capital appreciation. And so what you have to keep in mind is that when you're looking at something like this, it's always important to remember what type of security you're investing in, because they actually have different ETFs that are designed to track junior miners and senior miners. In fact, GDX is one of the ETFs that you can track when it comes to the senior miners, or more, mid-range producers to senior miners. And GDXJ, simply adding a J to the end of it, tracks the junior miner index. Now, some of the senior miners in particular are very good at generating cash flow. And some of these are actually increasing their dividends as of recently. And as the price of gold goes up, we're seeing a return in terms of these senior miners, or more established producers that are already profitable. And what you're seeing is that the dividends are going up, so you're actually able to get cash flow from these assets. And that's the beautiful part about it, because say you don't want to worry about capital appreciation, you just want to get some dividends and sit back while you benefit from the fact that these senior miners are already profitable, and they're going to be making more money as the price of gold and silver go up. So now on the flip side, the other way you can play this, and there's basically, goes back to the basic two ways in the market that you can make money. There's the, capital appreciation, and there's the cash flow. Now, when it comes to capital appreciation, keep in mind that, like I said, there's going to be more risk. But if you're looking for junior miners in particular, you might want to consider companies that perhaps have $1 billion or less market cap, or even, under 500 million, for example, because what you're going to get is you're going to get an asset that's going to allow you to participate in more upside. And there's my old school right there, Wolf Branch. I live about 5 minutes away, and this is one of the highest property tax districts. So unfortunately, this is the district I live in. I live not in this neighborhood, but the one down the road there. And it is a pretty neighborhood, though. It's an older one from the 90s, maybe the late 80s. But It's where my parents are the other direction. And, you know, like I said, this is going to be the highest property tax area though in the region, St. Clair County. There's a lake, houses on the lake down there. It's a nice area. It's just, you know, if you're thinking about moving to the Midwest, you're looking at about 25 minutes that direction to St. Louis, Missouri. So, you know, you are near the St. Louis Metro. Now, whether or not you want to be near the St. Louis Metro is a different story. But with that being said, I guess we're coming to a dead end here. We'll turn around. But as I was saying, you know, you have the junior miners, you also have the senior miners. So it really comes down to you, depending on what you want to invest in. Now, if you want broad exposure, then you can go for, you know, GDX or GDXJ. And GDXJ in particular is, like I said, more for the junior miners. You get diversified exposure to the junior mining stocks. And the senior miners are more for GDX. Now, in either case, you're really placing a leveraged bet, especially with the junior miners, on the price of gold and silver. And keep in mind also that some miners are going to be more focused on specific metals. So some miners might specifically extract a lot more gold than they do silver, and vice versa. So you might have some that specialize in, you know, more silver production, copper even. I've seen like Rio Tinto is a copper producer, more of an established player, but nonetheless, you're going to have that variety. And so that's something else to look out for in terms of whether or not, you know, you're going to be dealing with more of a silver producer, gold producer, or both, or, you know, kind of a variation. And there's some more houses here. A lot of these are, like I said, older homes from the 80s and 90s, but they're still held up pretty well. And it is a beautiful neighborhood out here. You just got to watch those property taxes, because if you go 10 minutes that direction, you're not in this school district, but you're paying a lot less in property taxes. And that's the unfortunate part, but also the fortunate part, because what happens is the higher property taxes do tend over the long term to help out your home value. So that is one thing to consider. And I will say this, it's very rare in this neighborhood, for example, to see a lot of homes come up for sale. And when they do, they get snatched up like that. So the school district, when you're looking at real estate, you know, it does make a big difference. And that's another thing to consider if you're looking at real estate. But this is another, you know, nice little cottage there. They have a hockey rink over here. But, you know, just a lot of great parks and everything. You know, Illinois is not the most exciting state, but, you know, depending on where you live, you can have some nice amenities, you know, some parks and whatnot. And anyway, let me know what you guys think in the comments down below. You know, gold and silver mining stocks. Like I said, you can get broad exposure through those two ETFs, the Vaneck Gold Miners ETF, GDX, and the Vaneck Junior Gold Miners ETF, GDXJ. Now, some of the individual ones that I've discussed on the channel have included like Newmont Mining, that's more of a senior dividend producer. I've also talked about B2 Gold as another one. So there's a lot of them out there, and you just have to do your own research. But let me know what your guys' favorite gold and silver mining stocks are in the comments down below. And as the price of gold continues to do well, let me know if you guys are buying any. I'd love to hear your thoughts. And with that being said, we will see you guys in the next one. Thank you so much for tuning in, and take care.